What's up everyone, welcome back to my YouTube channel. For those of you that don't know me, my name is Miguel and I love everything personal finance and fitness related. And in today's video, we're going over the stock market crash. When's it gonna happen? Is it gonna happen? If it happens, are you ready? I've been seeing a bunch of videos here lately talking about the stock market crash or the potential of the stock market going to crash in the next couple of months or so. I just remember thinking when I was a beginning investor, I was insanely scared of a stock market crash, but now I'm kind of excited for it. Because I'm a long-term dividend investor, I'm pretty excited for a stock market crash or the potential of a stock market crash. But before we get into all of that, be sure to subscribe to the channel if you haven't already. Leave a like on the video, it helps me out a lot. And if you have any questions, leave it in the comments down below, I will get back to you. But let's roll the intro. So, the reason why I'm not scared of a potential stock market crash is because I am a safe dividend investor that invests for the long term, and I'm mainly focused on the dividends that I receive from companies, not on the fluctuating value of them every single day. So what does that mean? So when I invest into a company, I look at their dividend yield, their performance over the past couple of years, and some other small factors like their market cap, their PE ratio, things along those lines, so that regardless of if the company is going up or going down, I'm going to continue to be getting those dividends, and I personally just want to continue to reinvest those dividends to hopefully create this snowball effect and 3 times or 4 times my money in the next 10 to 15 years. Now, why are people talking about a stock market crash or the potential stock market crash? A really big reason is because 40% of the money that the US has ever printed has been printed in the last 10 to 12 months or so, which is kind of crazy to think about. 40% of all the money in existence has only been printed in the past 10 to 12 months. You know, with that becomes a lot of questions like, why isn't there hyperinflation? Why is the stock market continually hitting all-time highs? And how long can we sustain this before there is a stock market crash? Now, if you're not a long-term dividend investor like myself, there's no need to fear. Even if you're buying into a company like Amazon that does not pay a dividend, you could always still continually buy the dip so that when it recovers from the market crash, you are going to have a greater return with a less average cost. But in regards to dividend investing, no matter what happens, I'm invested into blue chip dividend stocks. So these companies have incentive to continue to pay, and they have the means and earning reports to continue to pay those dividends even when they go down. We saw this last year when the pandemic first hit, and the only thing that I regret is not putting more money in when the market dropped around 30 to 40%, because my average cost could be way lower right now and I could be getting more dividends. Now, I did make some mistakes back last March by not purchasing some stocks that I wanted to purchase at the time because I was just overthinking and I was scared it was going to drop more. But more time that you spend in the market, the more comfortable you get, especially if you're a dividend investor. You don't look at the paper value as much as you look at the market cap, the PE ratio, their earning reports, so on and so forth, and ultimately their dividends. To kind of explain more what I mean, I'm going to use Apple as an example because I wanted to buy Apple last March and I was kind of scared to pull the trigger. So let's learn from my mistakes and go over how much I could actually be getting from Apple if I would have purchased back when I wanted to. So as we can see, Apple on the day is down $3, but I currently have 4.14 shares at an average cost of $118.40, and then the overall return is $34.56 or 7.05%. Now let's go look at where I wanted to buy back last March. We're gonna look at the 5-year mark and we're gonna go down to the all-time low when the pandemic hit. They were trading at about $60. Now if I would have bought in at $60, now I would have been up about $250 more than I am right now. But you know, hindsight is 2020, and the only reason I bring this up is because I don't want to make the same mistake twice. Now all the companies that I do invest in and that I am invested into, I'm 100% fine if they drop 50 to 40% tomorrow. Obviously I don't want that to happen, but I do enjoy buying the dip and getting more dividends for a cheaper price. Now, are all companies going to be like this, or all stocks going to be like this? No. Let me give you an example with AT&T. So as we can see for AT&T, I have 16 shares at an average cost of $27.93, a total return of $74 or 16.6%. And if we go to the last 5 years, comparing it to when the pandemic hit, AT&T is actually up right now. So back when the pandemic hit, they were about $29.96, and now they're at $32.57. A lot of people bash AT&T, but I think it has so much room for growth. They continually put money back into their company to watch it grow. They just bought Spectrum 5G. They are dividend aristocrats. They just became dividend aristocrats. So they have all the incentive in the world to continually put money back into their company and watch it grow over the long term. So I'm personally going to continue buying more shares of AT&T, but I think if there were to be a market crash, AT&T would go down, which because I do believe in the company, I'm going to continue to buy more shares of at a cheaper price, and plus they don't have a bad dividend at all. Now I'm also pretty comfortable with my dividend investment portfolio because I do do have other investments elsewhere. I use Yada, I use Outlet Finance, I use Coinbase for some other crypto investments, so I don't even have all my eggs in this basket. But I do feel pretty comfortable with where my portfolio is overall. I feel safe with all my investments, even crypto, but I'm just super excited if there were to be even a little dip in the market, because I can pick up way more shares of the companies that I love and I'm going to invest into for 25 plus years at a cheaper price. Again, just feeding the funnel, trying to create that snowball effect. I also just want to throw some encouragement at other beginning investors, especially if you're a beginning dividend investor. It's very hard and very discouraging at first, but after about 8 to 9 months of me doing this, I feel very comfortable and I'm really happy and excited to watch my portfolio grow to that $100,000 mark. And of course, documenting and bringing y'all along for the journey. If there's any more specific things that y'all want to see, leave it in the comments. I always love reading your comments, replying and having some dialogue with y'all. But if you're interested in any of the platforms that I suggested, or you don't already have Robinhood and you want to start your dividend investment journey, I'm going to link everything in the description below. But thank y'all so much for watching. I hope this video helped you. I hope you now have a better idea of the plan that you can implement for yourself, or some strategies that you can use when thinking about the potential next stock market crash. Be prepared, be ready, and most importantly, buy the dip. Be sure to subscribe if you haven't already. Like I said, comment if you have any questions. I will get back to you, and I'll catch y'all on the next one. Peace.